What really bothers me is that you have a market, you have the possibility for a truly severe disruption given the extraordinary leverage in the silver market. And by the way, many of the things that silver bugs traditionally identify with silver price manipulation. But I note that trade desks manipulate every market, including markets as broad as the euro dollar, the euro, and the US dollar. Manipulating the silver market, where you take a leveraged position, long or short, in the futures market, which is often levered 300 or 400 to 1 against the physical market, and then using borrowed physical silver to dump into the physical market where the trading volumes are fairly small. In other words, you maximize the amount of damage that you do to the physical market to maximize the leverage gain that you get in the futures market. I think that's been happening continually for about 20 years.
On the latest Silver Institute report, that global silver industrial demand forecasts to reach new highs. Industrial demand for silver is expected to grow 8% to a record high of 632 million ounces this year, driven mainly through investment in photovoltaics, power grid, and 5G networks, growth in consumer electronics, and rising vehicle production, according to a presentation at the Silver Institute. Now let's look at silver demand by India. India's average annual import of silver in the form of refined silver bars, grains, etc., is estimated at about 5,000 tons, out of which average annual import of silver grains is about 250 tons during last 3 financial years. Due to issues faced by the banks in importing silver in the past, banks are not allowed to import gold and silver through IIBX. Participation of the banks on IIBX for import of gold and silver is important to bring liquidity and price discovery. Now we'll show you clips of Rick Rule linking everything up, but first like, subscribe, and turn on notifications, and check our pinned comment for some massive sign up bonuses if you're planning to add crypto to your commodities portfolio while supporting our channel. More info in the description. Let's get into the video.
Totality of the silver market. At the Silver Institute, they have a bunch of smart young researchers who do nothing else full time. And the report, which I've studied in some detail, is an interesting read. It talks about the fact that there's a primary deficit for 2024 of approximately 1.2 billion ounces. It's important to note that the report doesn't attempt to categorize above ground inventories for the simple reason that nobody knows. A whole bunch of silver constitutes private wealth, particularly in South Asia. When people hold private wealth to shield themselves from their government, they very seldom identify that private wealth to the government. So we don't know what the above ground inventories are like. What we do know is that the low price for silver has made primary silver mining, that is to say, silver produced from silver mines, uneconomic or marginally economic in most cases. Most silver, in fact, is produced as a byproduct of copper mines, lead mines, zinc mines, or gold mines. And it is true that a recession, which reduced copper, lead, and zinc production, would probably have a deleterious impact on silver production, but silver demand might fall too, which is to say, if you are concerned about a recession, be concerned about the silver price. It will be a mixed blessing. It will reduce supply. It might reduce demand. It is important, though, to note that the low silver price right now depresses the biggest source of silver production, which is recycling. For many industrial applications, at $24 or $25 silver, the value of the money recovered in recycling operations is not enough to justify the recycling. And the industrial uses of silver are growing very rapidly. Its reflective properties and conductive properties make it absolutely a necessary component of solar energy, hence the Chinese fascination with silver. But importantly, too, silver is a wonderful germicide, and there are very rapid increases in utilization in water and wastewater treatment, in sanitation, and in medical. Maybe the fastest growing application that we're seeing with regards to silver happens here. It's also important to note, though, that the quantum increases in silver price that we've seen occasionally in the past are really a function of investment and speculative demand. We've noted on your show before, Dunnigan, that historically precious metals bull markets are led by gold. They're led by the fear buyer. And when the narrative gains popular currency among generalist investors, that commodity with a lower unit price, which is to say silver, begins to move further and faster. So I think silver speculators will need to watch the gold market. I think it's important, too, to note that in every currency other than the U.S. dollar, we're in a gold bull market. So I think that's important to understand. I think I've covered every point in your question, but at age 71, perhaps my memory failed me.
Now, in the continuation of the episode, Rick Rule highlights the good properties of holding gold and silver as a portfolio diversifier and safe money holding. He does a deep dive into the silver fundamentals and shares his valuable insights on how to profit from the current situation in a very pragmatical way. Hit the like button, smash the subscribe button, and turn on notifications to keep us motivated to do more episodes like this one. And claims your free bonus in Bybit so you can start trading crypto today. Let's get into the video.
Particularly in South Asia. India, Pakistan, Bangladesh, Sri Lanka. Those societies have a millennium-long fascination for silver. They have a need for a store of wealth outside their domestic currencies, which are inflated away. And the consequence of that is what the silver price does well in their own currency rather than in the U.S. dollar. They often dishoard that silver to use to meet household expenses and things like that. The silver market is devilishly tough to forecast because you have to know an awful lot about a lot of things. You have to know a lot about copper markets and lead markets and zinc markets. You have to know about the economy of India. Things like a drought can actually impact silver supply as peasants dishoard their silver to feed their families. So it's important to note that even an organization like the Silver Institute that has all of the resources which it can employ studying the silver market can very often be wrong. Don't know about the extent that that could happen. You and I have talked before, Dunnigan, about the fact that futures markets and silver paper markets often trade 200 times in a day the amount of silver available for physical delivery. Mostly, these trades don't settle in physical. Mostly they're rolled over, and only the differences are settled in physical. You could have a situation where you had a seller default, and that would be a truly ugly thing. Now, don't think that you're going to get a short squeeze, a real short squeeze. What will happen is that the exchanges likely will shut down for a while, and they'll cash settle. But they'll cash settle if that happened at a price much higher than today's price. So what really bothers me is that you have a market where the sort of gross trade position is in the billions of ounces, and the physical silver available for settlement is in the 60 or 70 million ounce range. You have the possibility for a truly severe disruption given the extraordinary leverage in the silver market. And by the way, many of the things that silver bugs traditionally identify with silver price manipulation have to do precisely with this. I'm not a believer that there's a decade-long or 2-decade-long or 3-decade-long conspiracy to manipulate the price of silver. But I note that trade desks manipulate every market, including markets as broad as the euro dollar, the euro, and the US dollar. Manipulating the silver market, where you take a leveraged position, long or short, in the futures market, which is often levered 300 or 400 to 1 against the physical market, and then using borrowed physical silver to dump into the physical market at some point in time during a 24-hour period, where the trading volumes are fairly small. In other words, you maximize the amount of damage that you do to the physical market to maximize the leverage gain that you get in the futures market. I think that's been happening continually for about 20 years.
What do you think of today's show? Do you agree with Rick Rule and his bull case for silver? Will a disruption in demand make prices skyrocket in the commodities sector? Post in the comments section down below your price prediction for silver in 2024. Subscribe to the channel if you have not yet done so. Share this video with a silver bug and check this video right here because you'll love it. I see you on the other side.